All right. So, maintaining a little bit of a bearish bias into the middle of the week here, pre FOMC, which is tomorrow. We've fallen back below Delta. We've closed below. Actually, this is kind of important. We've closed below Delta neutral on the weekly, with just a little bit of support at gamma neutral on the weekly. We did slip it this morning, briefly, retested it again later in the day, and then end of day closed right in the middle. This is roughly the market maker's projected move for the day. We did hit my low projected move early this morning, but closed a little bit above it. So far, right on track with my slightly more bearish than JFresh prediction for this week. So that's going great. But yeah, we were both kind of the exact same mindset for how this week would kind of play out. Um, Over here on ES, we've broken down, but we still have not lost the 5600 level. I would imagine that it's probably not possible for us to lose that level until after FOMC. That's going to be a really important supportive level, because if we slip that, we start falling back into where we gap down, and we start falling back into a lot of the put positioning that was sold to build up support for this move to the upside. And so a continuation of the breakdown here would obviously be very bad. Right now we've stabilized, and probably will stay somewhat stable or even pump a little tomorrow into FOMC. But then, I don't expect the Fed to do anything. I expect Trump to react negatively to that. And then, we could get that narrative back of Trump threatening to mess with the independence of the Fed and getting rid of J Powell before his term is up, which he retracted at largely what seemed like Besant's behest, given that Besant was the first one to come out and openly disagree with Trump on that particular policy choice. And so I have a feeling that it will be very hard for Besant to get Trump to back down a second time. But I also have a feeling that even with the political pressure, JPOW is very unlikely to cut rates given where data is right now, especially after the PMI report from yesterday. So anyway, that's for tomorrow. Today, rates fell a little bit following the 10-year auction, but still significantly higher from Wednesday of last week. They've been pretty much climbing up fairly consistently with the last leg of our pump here. Today falling a little bit lower than open, but the 10-year is still above 4.3, 20 above 4.8. So the top end of the curve doing fine, and the 2-year actually losing the most ground, which will push up on the bear steepener a little bit. I will look at that in a minute. Commodities up again, this time on oil and gold, which had another 3% day to the upside, alongside silver, 2.34, and oil at almost 3.5. Oil's getting real cheap, and with all the geopolitical risk going on, I would say it's heavily oversold, and we'll probably get some kind of recovery, maybe back to like 62 or 64 a barrel. Which could help strengthen the dollar a little bit. However, if the dollar falls with Powell's decision tomorrow, we could see oil slip again, as long as there's no other geopolitical news. Correlation's starting to break down from where we bottomed out. We kind of double tapped the low there on the 1 month, the same low on the 3 month. We actually had a little bit more leverage come in. On the second leg higher or leg lower in correlation, but now we're past like a majority of the tech earnings. There's not much left. There's no reason for market makers to continue to hold on to that volatility hedge and all of that delta. And this is yesterday and today are probably the first steps we're seeing towards them starting to dump all the delta they've been holding into the earnings season. Now, remember, Nvidia still hasn't reported yet, so there is a chunk of the Mag 7 and the semi industry that's still going to retain some of that, long dispersion trade. So, or well, short index, long underlying. Leverage on the carry has been falling since Monday, where we peaked around 8.1x, now back to 7.9. Definitely not near the lows that we were at the beginning of May, end of April, but getting very close to them again. And alongside that, we're seeing the forward yield on volatility start to bounce off of zero. Remember, I said that if anybody wanted to go long vol on all the bonds that they were buying in here, this would be a very cheap price to start hedging those portfolios, and it does seem that we are getting some long volatility demand in this range. We're seeing, obviously IV increase, VIX and VIX 3-month up today, along with VX1. Obviously, VIX cash VIX still a little bit in backwardation. Not a ton, but a little. Bond volatility picked up yesterday. Might move a little today, probably not too much. But we are seeing correlation on the 3-month rise, and we should see bond volatility follow suit. And so we might see yields move further down, depending on the Fed tomorrow. For skew, a little bit of a pullback. I mean, it's not doing much. No big moves, at least. So some extra out of the money put demand end of day yesterday, but I feel like today is really probably going to be flat or inconsequential. We are seeing correlation continue to break down between VIX and cash VIX, or VX and cash VIX, while VX is rising. And so that means they're continuing to short vol into rising volatility, which puts them in a very precarious position come tomorrow if any volatility is realized from the rise in event volatility that they have been shorting into. Obviously they're going to be more exposed to, whoever's doing that is going to be more exposed to any downside move. So, all those put sellers that are continuing to come in, despite the event risk tomorrow, are carrying a lot of extra risk that they may regret should that event not turn out as hoped. What's really interesting here is almost nothing's fallen back below its 20-day moving average. I think we'd have to drop quite a bit in the short term for most of the stocks in the S&P to even get back to their 20-day moving average. So this is really not a great indicator right now. Fed fund futures moved up a little bit from yesterday's close, but still pricing in basically one rate cut into the September contract or September meeting. I really don't think today's data had any significant effect on that. Tomorrow we may see some change in Fed fund futures. Bear steepener up, but just a little bit, like 1%. Although, I mean, if we were to do it from a technical perspective, does look like it's getting ready to move into another leg higher. And then lastly, on the technical side, we moved down and tested this. I think that's actually a trend out on the weekly, but this is just scaling it wrong. No, I think I just maybe moved it by accident. We did move down and close below 56.11, which was kind of an important level. Previously back in April, and we lost it. Not super significant. Obviously, the 50 MA to the downside, and the 30 EMA here at like 55.20 and 55.70 are going to be far more important technical levels for us to lose. But we did actually fail this shorter dated consolidation trend right there. I'm sorry, I don't know why those are moving. I think it's when I switched to the weekly. They're on offset dates. That could be a significant failure, maybe back to retest this kind of lower trend from our bounce. But a failure there would basically mean a retest to 54.02, which is the level we're watching to the downside anyway. And then any support in this range, especially around 54.88, could mark the next leg up, which would be like 56.96, 57.73. So right now, this is failing, but it's still failing very slowly and kind of consolidating a bit. We're still seeing short vol come in. So the chances of this, like dropping to support and then bouncing are very high still. We definitely want to see this move down through support to confirm any kind of downside continuation. Right now, I would say that there's still a very good chance that it could bounce off the 50, the 30, or even the lower trend down here around like 54.88. So any of those levels could lead to an upside reversal if the damage from FOMC tomorrow isn't too severe. My expectation would be that we continue to consolidate for another leg up. That's about it. So thank you guys so much for tuning in. Have a good night, guys. Later.